In this video, we run through the existing properties page. This page is for entering details for investment properties that are already owned. If you want to enter details for a property that you will live in, i.e. a principal place of residence, you can use the Home Details page. And if you want to enter details for investment properties you are considering purchasing, you can enter the details in the Proposed Properties page. First up, we can choose how many existing properties we want to include. The calculator allows up to 5 existing investment properties and 5 proposed investment properties in any scenario. So you can look at scenarios with just 1 property, or 3 properties, or 10 properties for instance. Okay, so let's run through entering some details here. So we've already got some investor details and home details entered for a couple. You can see these details entered in the investor details and home details videos. So let's choose one existing investment property for this scenario. Let's enter in a name for this property, for example, Walker Street. We can then split the ownership between our couple. Let's just choose, say, 50-50. Now let's enter in the income details for the property. Note that we have an in-depth explanation of each income field in our help and support area. So let's enter in 500 here for the weekly rental income. For the rental growth rate, this is the percentage increase in the rental income each year. It is independent of any inflation rate entered in the calculator. Let's enter in a rate of, say, 3% per annum. Now, rental growth rates will most likely vary from year to year across the 30-year period. So for this reason, the calculator allows you to vary the rental growth rate, capital growth rate, and interest rate for any year that you want via the yearly changes page, which we'll run through in another video. The annual vacancy rate is the percentage of time that the property will be vacant each year. 1 day is equivalent to around 0.3%. So let's say this property will be vacant for 7 days a year while finding new tenants. This is equivalent to around 2% a year. Finally, let's choose a default capital growth rate of 5% per annum. Of course, as mentioned, you can change the growth rate from year to year on the yearly changes page. Moving on, let's run through our expense details briefly. Again, we run through each of these expense details fields in detail in the help and support area and in several guides on our site. All these expenses will increase every year with inflation. The default inflation rate for the calculator is 3% per annum, but of course you can change this on the investor details page. Let's say there are $500 in accounting fees each year for paying accountants to handle depreciation schedules and tax variations, etc. In this example, let's also assume the couple pay an agent a 3% commission each year to manage the property. The property is a relatively new place with strata fees of around $1,000 a year. Council rates of around $1,500 a year. And repairs of, say, $250 a year. And let's say there are electricity charges of $1,000 a year. Note that the expense details here should only be entered if the investor is the one who pays the expenses. If the tenant pays the expenses, then they won't be deductible, and so they won't be applicable to the calculations. For the bank charges on the loan, this is simply the loan servicing fee charged by most banks. Australian banks charge monthly loan service fees of around $10 a month, so let's enter in $120 a year. For insurance, let's assume this couple pays $400 a year in landlord's insurance. We won't run through land tax in detail here, but as mentioned, we run through all these fields in detail on our site. Let's just assume no land tax is payable on this property. Moving to depreciation, deductions for depreciation are calculated automatically each year. Let's enter construction costs of, say, $250,000, a construction year of 2004, and a fit-out value of, say, $30,000. For more information on depreciation and how it is calculated, you can check out our depreciation guides on our site. So let's say the current value of this property is $500,000 and was purchased in 2005. The year is relevant for capital gains tax calculations, which will vary depending on when the property was purchased. For our loan details, let's assume this property has a $300,000 loan remaining on it. And it's being paid down principal and interest with a 15-year loan term. These payments are being made fortnightly with a pretty generous interest rate of, say, 7%. Now let's assume in this example the couple wants to see what will happen if they sell their property. So let's just choose yes here. And we can enter in how many years from now we want to sell the property. Let's just choose 5 years from now. The calculator will automatically calculate the sale price in year 5 based on the capital growth rate we've put in. So we can choose to override that or simply use that price there. So let's just assume we want to use that price. We also enter in the purchase price for the property, which was, say, $450,000, and there were purchase costs of, say, $20,000 arising from things like stamp duty, etc. And there will be selling costs of around, say, $10,000. Now let's take a look at some of the results quickly. Note we go through each results page in detail in other videos, so we'll just check out the results briefly here. In our investment summary page, we can see that in 4 years from now, we can see that our property will be worth around $600,000 with equity of around $360,000. There'll be capital growth of around $30,000 from the previous year, and we can see the cash profit and loss for the 4th year of around $4,000 profit, and our taxable profit or loss of around a $3,000 loss due to things like depreciation. We can also see that adding in principal payments and taking account of the tax saving, the actual cost is going to be about $9,000 a year. We can see all the calculations behind these figures in the other investment analysis pages, like the cash flow page, the assets and loans page, and the investment costs page. And of course, we can see how this property affects our couple's overall situation in the entire situation section reports. Okay, that wraps up our existing investment properties video. Feel free to check out our other video tutorials on mymoneycalculator.com.au, and remember, if you need any help, you can check out our help and support area, or don't hesitate to contact us.